we're probably pretty fortunate because we're focused on the asset management industry, the broader retirement wealth industry in China, which is growing it exponentially. Fast aging population, 1.5 billion, high savers. And it's really early days for the retirement system in terms of that three-pronged system where they have a social security system and they've got corporate pension plans set up. And they just set up this month, the third pillar, our RSP equivalent. So the government's committed to having the retirement security of the citizens. It's deemed to be probably the second largest retirement market soon, much bigger than Canada already. And so we're very encouraged by the long-term growth prospects in the asset management industry in China, outside of the noise that's perhaps surrounds some of the conflicts.
And that presumably, as you say, it's just beginning. Is that expected to be a big part of your business? Where do you put the kind of China piece in your overall thinking? Yeah,
so it's the industry, the asset management industry in China is only 20 years old, so it's very young, but it's growing very fast. The experts believe that over the next decade, for instance, half of all the global flows into the asset management industry will emanate from China. So it's a powerful story in terms of growth. So for us, what we've done is we have a significant minority interest in China Asset Management Corp, which is number one and number two domestic firm in China. So what we want to do is work with them on the ground and make them better. And then we cross-distribute each other's capabilities. So they supervise some China funds for us here in Canada, and they represent some of our capabilities in China. So that's really the relationship early days.
And do you see the trend being that the Chinese wealth investor, the retiree, will want to see their investments outside of China? In other words, will there be a big increase in the amount of Chinese investment in North America and Europe as a result?
Good question. There'll be right now there's still restrictions. Most Chinese investors can only invest in China. Now there are quotas that are in place that allow some Chinese investors to invest outside of China. There is probably the expectation that those restrictions will start to come down. Foreign companies just last year now are able to, it's called a wholly owned foreign entity. Foreign companies can now start to build their own company in China with restrictions. The foreign companies can now own a majority of a domestic Chinese asset management company just last year. So things are starting to open up. But that's not atypical here in Canada. When I started my career a long time ago, we had a 10% foreign content limit, went to 20, went to 30, and then obviously it was eliminated. So China is trying to control its capital inflows and outflows. But the expectation is as that market continues to grow, as their stock market, which is already the second largest in the world, starts to grow and mature and become more institutionalized, then there'll be more free flowing between inside and outside China, and the Chinese could invest outside of Canada.
We don't know how much deregulation will happen, how much opening up, how the currency might float. There's all this kind of potentials.
Yes.
Can we make a comparison to the 80s when the Western financial markets really began to deregulate? It created massive opportunity. Is there that future opportunity
I think
in China?
that's a very good analogy. We look at some aspects of that retirement market in China looking how we did North America 30 years ago. Right now, it's less than 10% of Chinese households invest in the stock market. So it's very early days. They don't have a stock culture yet. The mutual funds in China, which are over $2 trillion US already, more than half are money market funds because the yields are still pretty high. But as we had large money market funds in North America. That started to rotate into longer-term funds. So the rotation, which is just starting, of the investor in China starting to rotate out of real estate and term deposits into investment funds, mutual funds, and ETFs, which they have now in China. That's just starting. That will be a 20, 30, 40-year play. It looks very much like we did, but rather 30 years ago.